Great day, great day, great day to all you beautiful people out there. Welcome to another episode of WWDJ where we're talking wealth and wellness with me, your girl Demetria Janae. I hope you all have been well. I'm excited to share some information with you all today. You know, we're going to be talking about wealth and we're going to be talking about wellness. I know I typically start with the wellness side and I go through some tips and information on that, but I think today I'm going to do something a little different. Today we're going to start on the wealth side. Today I want to talk specifically about life insurance. How do y'all think about that? I think we're going to talk about life insurance today. As I've shared with you before in another episode, life insurance is something that I do. One of my businesses that I like to share with people. And so today I want to dive in a little deeper. I know that I've previously shared just a little bit of information with you guys, little tips here and there about what you can do with life insurance. However, today I think we're going to do a deep dive. All right. So before I know that we've mentioned making sure that people understand that there are different types of life insurance. So I'm going to just do kind of a recap just in case if you haven't seen the first episode where we talk about the difference between whole life and term life. I do recommend you be sure to check out the first episode of WWDJ. But if you haven't, I'm going to give you some of those tips and information and to know the difference between whole life insurance and term life. I actually have some notes with me here today. I don't think I've ever had notes before. So with a whole life, well, I'll start with the term life. Term life policy is typically what most people have. Okay. Now I have been an insurance agent I started actually specifically just life insurance for about a year and a half now, but I started actually selling insurance 4 years ago. I did supplemental insurance, I did health, and I did life. But I hone in now specifically on life insurance just because it's my passion and I understand that there are so many different things that we can do with that to help us. So starting with term life insurance, that's your typical life insurance that most people get. And I think it's an absolute great benefit for people to have. But I also believe that there's no one particular product for everybody. And that's in any industry. You always have to have options of how you do things. Okay. So with the term life policies, it is what it's called. It's for a specific term for a certain amount of time, period of time that you're going to have the policies. Most policies are going to go between 10 years, I want to say 25, 30, and some even go up to 35 years. So it really just depends. And based on those terms, it usually can be a factor into your premium. Okay. So term life is not something that you will have for your entire life. It will go by a term period. So if you get the policy when you're 25 and you only get it for 10 years, when you turn 35, you're going to have to renew. So technically you could have a term life for the rest of your life. It's just that your price and premium will not remain the same because you're going to have to continue to renew. Well, what happens when you renew? You're 10 years older, you're 25 years older, you're 35 years older, and more than likely your health has changed over the course of that time. So not only will you have to renew, you're 10 years older, you're 25 years older, that's going to contribute to your premium, but now you have to consider what your health is like. Have you been taking care of yourself during this time period? That's going to also have an effect on your premium as well. Okay, so when you do this renewal, you're going to consider pricing, you're going to consider your health, and you're going to consider your age. All right, and that's not something that people always want to have to go through because of the fact they may not be in the same health that they were. Most people are just not in the same health that they were at the age of 25 when they're 45 years old. So that means that they're going to have to take some things into consideration. All right. So that is term life. With term life, you also only get the policy itself. There are no additional benefits to the term life. It's literally just to cover a death benefit. Is that a bad thing? No, not at all. Because some people only need just a death benefit. All right. With that being said, there's no cash value or anything. There's no growth of the money while you are utilizing your policy. All right. So that's term life in a nutshell. And then on the whole life side, it's as it states, it's for your whole life to the age of 99 is what it actually is for. Typically, With whole life, there are several benefits to using whole life. And that's what I really want to get into. Because we call life insurance as it is, life insurance, yet our main focus is always on the death benefit. So we're calling it one thing, but we're focusing on another. All right. So I want to dive in a little deeper with that. With a whole life policy, you have it for your entire life. With the whole life policy, you build cash value in it as well. And with the whole life policy, you can use the policy for your life. All right. Now, the way that I like to actually utilize life insurance as a tool for different things that people can use it for their actual lifetime, all right? Well, we don't even really focus on the death benefit because the death benefit is almost just like a added benefit or added factor to having life insurance. But we don't focus on the death benefit because it's a given. It's what you're going to get with having this tool, all right? Using life insurance on the whole life side, a permanent policy, a permanent life insurance policy can assist you in ways, for example, of having a tax shelter for your savings, okay? It can also assist you with setting up for retirement by utilizing life insurance. And these are just some of the ways that I like to use life insurance for my clients as well as for myself. All right, so I want to talk about a few things. I know before we have discussed the difference in between saving money and growing your money. All right, and that y'all know that is something that I am truly passionate about, being able to grow your money while saving your money. Everybody knows from my mentor, I've learned your money should always be pregnant, having little money babies. Like, I mean, that's just how things should be going. You should be able to be somewhere else, doing somewhere else, working on another opportunity, spending time with your family, and your money should be working for itself, growing, impregnating that dollar to have more money babies. We have to get in a mindset of employing our money the way we try to employ ourselves. That's so important for you to understand because we work, like Rihanna say. Isn't that Rihanna that sing this song? Work. I think that's her song. We work so much, we have to learn how to work our money the same way. Put our money in an environment that is going to be able to produce more and more of itself, the same way we try to stretch and replicate ourselves and duplicate ourselves to do 1,000 things at one time. Making your money work for you is always going to allow you your time. Your time is the most valuable thing that you have. It is the only thing that you will never be able to get back. So, all right, enough preaching to you guys. Let's dive right on into this, all right? So, I do want to mention and say that saving and managing money is a behavior and it is a lifestyle, all right? Saving money and managing money is a behavior and it is a lifestyle. If you do not practice this, if you don't first get it in your mind that it is a lifestyle, it is something that you do daily, you will never be able to fully fulfill this and be able to truly see the freedom that you could really have. And when I say freedom, I simply just mean your time. And your time does not mean you don't work at all. If you enjoy working, if you desire to work, then work. But I don't want you to have to work so that you can pay your bills. I want you to already have something established to where your bills are already set. So if you decide to work, it's something that you enjoy doing. If you want to take a week off to go on vacation, to spend time with your family, you can do that. If you want to take a week off to go be able to have some self-care time away from everybody, you should be able to do that. So you have to understand that it is a lifestyle and it is a behavior that you have to practice each and every day. Now, while saving your money is a behavior and lifestyle, investing money is a skill. That's not something you just practice over and over and over again, because as you practice, you're going to be taking a risk and you're going to lose some money at the same time. It is a skill. It is an art that you have to master, that you have to learn through not just experience, but there are plenty of books that tells you how to do this, plenty of workshops that you can attend. It's just like going to school. Everything that we learn in school, they send us to school so that we can learn these things and not just learn it by experience, because certain things have to be taught to us, all right? People do also fear what they don't understand. And so that's why we have platforms like this. You know, the Paradigm Television Network has allowed people like myself and a plethora of other skilled and talented people that have gone through the experiences of things to be able to teach other people what it is that we know, so that the spirit of fear does not have to dwell amongst the people for their lack of understanding. So I want to really hone in on that most people fear what they don't understand. So to all of my entrepreneurs out there, you have to also remember that your customer is not only going to, but they're more inclined to be a customer of yours when they feel that they can relate to you, when they feel that you understand them and that you care about them and their needs. I'm a need-based service type of person, so that's something that sticks out to me. But people fear what they don't understand. So share what it is that you know. Share what it is that you know with your community as well as your family, okay? Because most people do have limited beliefs. We have to be able to expand that with people. All right, I'm getting off topic. I'm over here encouraging. I'm supposed to just be talking about money here. All right, so let's keep going. So in regards to the life insurance side, like I said, you have your whole life and you have your term life. There are 4 types of wealth transfers. Okay, we've talked about that as well. About having those wealth transfers, about having an opportunity cost. Opportunity cost is every time that you take a dollar and you look at how many opportunities you have that you can make happen with that dollar, that $5. How many opportunities are there that you can put that dollar, that $5 to work? And then you have to look at the wealth transfer for every time that you spend that dollar, for every time that you spend that $5. You're transferring the wealth to someone else's legacy when you are not putting that money back into your own community or back into your own legacy, which is yourself and your family, by spending money in that. When you spend money, it stops working for you because it's no longer serving you. So until you put that money to work, until you employ that money will always be a wealth transfer into someone else's legacy. All right, so those 4 types of wealth transfers are investment losses, taxes, fees, and like I said, the use of money. Okay, I may not talk about life insurance. I'm gonna get there. I'm trying to get there, but I'm giving y'all some pointers of the points you have to understand before you can even do something like life insurance in this capacity. One thing that I've learned, I can only talk to certain people about this concept because we lack money discipline. So maybe I'm not going to get to life insurance piece today. Maybe that's the next episode. But we have to understand the fundamentals, the mindset, and the foundation in which you have to understand how this works before you can even do the life insurance piece. But I am putting it out there for life insurance. You can utilize it as a tax shelter for your savings. You can utilize it as a way of setting up your retirement. And I can assist you with that. But before we get into that too far, I got to stay here, all right? So the wealth transfers, again, the wealth transfer is when you are taking the money that you have and you're losing it, okay? It is in some form of a risk. Well, I said investment loss. That may seem like it's contradicting itself. Why? Because we know that people do investments because they want to make more money, right? So how is it a wealth transfer? Well, anytime you do an investment, note that I did say investment loss specifically. So when you lose an investment, yes, you are transferring that wealth. But when you do an investment, you have to understand that there's always a risk at hand because you can either gain or you can either lose. All right. So, of course, when you have a loss in that investment, you have now transferred your wealth that you could have gotten from the gain, and it is now in somebody else's hands. Their legacy is now going to benefit off of it. Their business is now going to benefit off of that. Fees, of course, is another great one. Now, y'all know there's a fee for everything these days. And every time that you make a purchase, you pay for the product and then you pay a fee on top of the product. So with the product, I won't even say that I won't go to the fact that you've made a loss right there. You've had a wealth transfer just in purchasing of the product itself, because depending upon the product, it may determine if you're actually going to gain something from that on your own end. But the fee has nothing to do with the product. That fee specifically pays for and contributes to the legacy of that business, the legacy of that company. That's what that fee goes for. So you have lost out on what your dollar could do based on that fee, depending on what it is. Next, we have taxes. Number 3 is taxes, 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 taxes. Now, I've been flying quite a bit lately. And the last 3 flights that I have purchased, I paid more in taxes and fees than I did for the actual flight in itself. And that was for 3 people. So the airline has not only gotten my money for my ticket, for my seat, for the gasoline to fuel the plane, but it actually is now also the taxes and fees is also going to be getting my money as well. So taxes in your 401ks, your Roth IRA, traditional Roths, your investments, all of those things have some taxes that you're going to be paying extra for, that you are going to be losing out on money. Taxes is one of the main things that we lose out on so much money. When you have your 401k and you're contributing to that, they say you own the money, but if you have to ask for permission to use your own money, it's not your money. That's what the truth of the matter is. If they have to tell you what you can spend, when you can pull the money out, how much of the money you can pull out, and at what time you can pull the money out, 59 and a half, and they're penalizing you 10% if you pull it before then, you do not own that money. We have to be real with ourselves, and we have to understand that. We lose out so much money due to taxes. Think about the checks that you get for work. Uncle Sam, so they call him, is always going to get his before you get yours. Taxes is one of the main wealth transfers that exist. And lastly, back to what I initially started off with, the use of money, spending money. If I was to go out to a restaurant, which I do often because I love to eat. I am a foodie, please know that, and I have no problem supporting other businesses. Please don't confuse what I'm saying, that the use of promoting or patronizing other businesses is a bad thing. That's not at all what I'm saying. What I'm wanting you to understand is the mindset of how money works, so that as you are patronizing other businesses and you are spending your money, you're knowing where your money is going. Do you trust in the company that you are patronizing? Are they a business of integrity? Is your money worth going to this particular company? Those are things you just have to consider. But the use of money and spending money is indeed a wealth transfer. It is indeed a wealth transfer. And that's just bottom line, because anytime you spend that money, it is no longer able to have an opportunity to make another dollar for you. All right, so those are the 4 types of wealth transfers. I hope you got those down. Investment loss, taxes, fees, and just the use of spending your money. All right. What else do I want to try to cover with you guys? All right, so let me go into a few things about how you can utilize this life insurance on the whole life side. Okay. On the whole life side, just to give you a few of the benefits, we know that life insurance provides you with the death benefit protection, the liquidity for your heirs in the event of the worst situation, of course, being your death. Okay. Using permanent life insurance in your retirement portfolio. Again, remember, you can use life insurance as a retirement setup. All right. So utilizing the permanent life insurance in your retirement portfolio may provide you with the ability to manage your future tax burden in a more effective way. What do I mean by that? Hear me out. So you're setting up your retirement, right, in a 401k. And this is where the pre-tax and the post-tax comes in. So you're not paying taxes on this 401k. You're contributing to it. Do you know what that actually looks like and what that actually means? Who knows what the tax bracket will be in the next 35 years when you retire? So you're telling the company, I'm going to put my money here right now. You match it. If they even match it, there are some companies that don't match it. And you're telling them, I'm just going to risk whatever the taxes are at that time. 30 years from now, I'm okay with just getting hit with that amount at that time. That's a risk. That is an investment risk that you're taking. Instead of having the taxes taken out beforehand, knowing what it is right now, and just getting the taxes taken out then. But why even have the taxes at all? Why do we even have to have that necessary? There's ways around that. There's always options. All right. So I'm going to read something here that I have so that you guys can get a little more information on. So unlike a qualified plan, there is no 10% penalty when you can utilize life insurance as your safe tax shelter for retirement. All right. There's no 10% penalty tax on distributions prior to age 59 and a half, because again, that's how 401ks are set up. If you withdraw from it before 59 and a half, you're going to have that 10% penalty. All right. There are some restrictions if you do not adhere to the structure and the rules of how you can set up your life insurance policy. And if you are interested in that information, you can always contact me for that information. Contributions are not limited by earnings or capped at a certain dollar amount. We know with the 401ks and some of the IRAs, there's a cap, there's a ceiling to how much you can contribute within a year. You don't own a 401k because they're telling you how much you can contribute. They're telling you when you can pull from it. They're telling you why you can pull from it. You don't own it. If you have you a permanent life insurance policy and it's structured the appropriate way with a mutual dividend paying company, you will own that policy, which means you will own that money inside of that policy, and it's a whole game changer. All right. With life insurance, the annual premium contributions are only limited by the policy size, your insurability, and the product size. So let's go there. Insurability is very important. All right. Insurability is very important when it comes to life insurance. Why? Because not everybody in America is in the best health. And that's just a fact. There are so many people that are overweight, have life-threatening diseases within their bodies, ailments. A lot of people are uninsurable. So it is vital that we do talk about this thing called life insurance to our younger generation, where they are in their best, most optimal health, so that they can get a policy. Again, it goes by age. It won't cost them as much. Now, whole life insurance does cost more than term. That's why most people get term, and which I do recommend for some younger people or even older people, middle-aged people, because it's more cost-effective for them. But you got to know, again, we're talking about the wealth, we're talking about the financial piece. If it's good for you short-term, is it going to be good for you long-term? And the goal is always to set yourself up for the future. I understand things happen in life. We have emergencies and things like that. So sometimes we have to do what we have to do, and a term life may be suitable. But don't allow term life to just be the only thing that you ever contribute to, because there's so much more that you can do with permanent life insurance. And you don't have to go through the rigmarole all the time of having to constantly renew, go through blood work, do that all over again. All right. So insurability goes by your health. Okay. Are you healthy enough to be approved for a policy? That basically just means how much of a risk are you to the insurance company? Okay. If you are a high risk, they may not insure you at all, or they just won't insure you for as much, because they go by, there's a data that they go by as far as how long they expect you to live based on your lifestyle, based on your medical records, and based on your hobbies even. If you like jumping out of planes all the doggone time, they may not insure you, because you are putting yourself at risk to go splat right on the ground. Real quick, fast, and in a hurry. They're going to have to pay out a big old death benefit real soon. They're not trying to do that, okay? That's a higher risk for the insurance company. So your hobbies matter. Your lifestyle, what you eat on a daily matters, because that contributes to your body mass, your body weight, and it contributes to so many other things that they will look at to see if they will insure you. So know that insurability is a major factor, along with your age. And even if you're not insurable, you can always insure children. My mother had a policy on me. She probably still got a policy on me. And I'm married. But that's a whole nother conversation. But you can insure your children. You can insure anyone that's, what is the word? They have to be insurable, but they have an insurable interest to you. So that's why people like your children, your parents, if you have custody of some children, those are people that have an interest to you, because in the event of their death, you either are going to have some type of loss on your end, or if you're the person taking care of that child, or that you're a caregiver of that parent or that relative, if they were to pass away, you're going to have to be the one to step in to take care of everything. So long as they have an insurable interest to you, you can't just have an insurance policy on just a friend that you met around the corner, because that just doesn't make sense. And there's no insurable interest on that. Okay. So that is something to consider. Some people, they do have to make sure that they have policies on their children or a parent, especially once your parents start getting older. That's very, very, very important. I'm even going to go as far as to say is If your parents are older, make sure they have life insurance. Make sure they have been paying for this life insurance. See if it's something that you need to do to take over that. I have seen situations where parents have been saying that they have policies and they don't, or they don't know what they have, and maybe they had a term life and they just knew that they were paying a premium and wondered why the premium stopped having to be paid, and it's really because they had a term life and they no longer have it. Have these conversations, family. The whole purpose of the Wealth and Wellness platform is to spread education and get the community back to communicating, setting up legacies for their family, and keeping the family healthy and alive. All right. So have those conversations with your parents. Have those conversations with your children. All right. Now let's talk about the stock market, because the stock market kind of goes hand in hand with the life insurance on the permanent side, because you're able to have that cash value. All right. So the stock market volatility also poses a risk to many retirement portfolios. So most life insurance policies do not invest directly in the stock market and therefore may help mitigate this risk. Again, we want to eliminate as much of the wealth transfers as we can. The way that I like to structure policies, if it's suitable for my client, we're gonna allow you the opportunity to gain when the market gains, and you stay steady when the market goes down. There's all different types of ways that you can structure these policies, and that's what I like to provide to people: options. Again, no one specific product for everybody. Everybody's situation is different. And so I want to provide you with options of how it can be suitable for you. All right. So let's also get into some cash value information here. All right. Like what we're talking about, that post and after taxes. So premiums are paid with after tax dollars, and the cash value accumulates on a tax deferred basis. Now, the cash value is always going to grow as you're contributing to the policy, making those premium payments. All right. And depending on how the client may want their policy set up, you can be contributing more to the cash value or more to the death benefit. But remember, life insurance is for your life. You want to contribute it more to the cash value so that you have access to money to borrow from. All right. When you want to borrow this money, you're going to be able to, ideally, you want to use that money to grow more money so that you can put that money back into the life insurance policy and use it all over again. It's the circle of life. Y'all seen The Lion King? The circle of life. Anyway, yeah, the circle of life. Lion King. You want to keep the money going in your circle of life, in your community, in your legacy, in your wealth transfer that you want to keep going on and on and on from generation to generation to generation in your particular family. That's how we're able to build up the community back over and over again, by keeping our dollars within your own specific community. And you can do that with life insurance. Again, paying into the life insurance policy, building up that cash value. If you need to go purchase a vehicle, you can pull the money from the policy to go purchase the vehicle. You become your own financer. No more going to the bank to get a finance with high interest rates and based on your credit. And maybe you're trying to build your credit, but you have the cash. So many people are like that. That's what the life insurance is able to do for you. You pull the money out of your life insurance policy, you go buy that car, and now you make the monthly payments that you would have been to another financial institution, to your own financial institution, which is your life insurance policy. So you will have a monthly payment that you're paying back, because when you borrow the money from your policy, you do want to pay it back. Well, some people are like, well, I don't want to pay my own self back. Like, what's the point of that? I might as well pay somebody else. Again, saving and managing money is a behavior and it's a lifestyle. If you don't first understand that, this process is not for you. Because if you're willing to pay somebody else back their money, but you're not willing to pay your own self back, we got to shift your mindset. Because you and your family and your legacy should come first before the profit and gain of somebody else's legacy and building of their financial legacy. Not that it's anything wrong with, of course, helping someone else, but you have to take care of you and yours as well. All right, off that soapbox. So that is how you can utilize that. Again, cash value builds every single year. And here's the great thing about the cash value and the borrowing of it. Even as you're borrowing from the policy, again, these have to be structured a certain way. This is not your traditional whole life policy type of setup. These are specifically mutual fund dividend paying life insurance policies, okay? With these policies, again, you're paying into it, building up your cash value, right? And then you go see a car that you want to purchase and you want to start renting that car out. You want to put it on Turo or whatever those sites are that you can, so that you can make more money off of the money that you just spent. So you pull from the policy, you purchase a vehicle. Now that vehicle is now employed. You give that vehicle a job. You put those dollars to work by allowing that money to be able to be growing by someone else renting the vehicle, right? So now you're going to pay back the policy with the money earned. The money that was employed has now brought you here's your paycheck, sir, right? Now that money gets to go back into the policy, and whatever gains you may have made off of that, because of course you want to do this smart. You want to do this strategically. Whatever you borrowed and whatever your payment is back to the policy, you want to make sure that you're getting that back plus some for whatever you may be charging for someone to use that vehicle. So maybe you want to pocket some of that money, but why pocket it? Because in your pocket, it's not going to make more money. You put it back in a life insurance policy. Now it's going to grow more cash value for you. And then the cash value is also going to still grow, even though you're borrowing from it. And it's going to grow at the full amount that should be in there, not the amount that's in there from what you borrowed, if that makes sense. I hope I'm not going too fast for y'all. This is a method that you have to first have an understanding, number one, of how important you are, how important your family is, how important your community is. That will drive you to stay in the strategic line of how this process works. There's no selfishness in this. It won't work. It won't work that way. All right. Funding is not limited based on income. Now, you know, when you try to go get a vehicle, you try to go get a house, they're giving you funding based on your credit score and based on your income. When you need a life insurance policy, it's not going to be based on just it's not going to be based on your income. Now, granted, it is a life insurance policy, so you have to be insurable, so your health matters, right? But funding is not limited based on your income. There's no 10% penalty tax on the cash value, nothing about no distributions for your distributions prior to 59.5, none of that. When you need the money, you ask for the money, you get the money, all right? Because you own this policy. You are the policy owner, so you can withdraw from this policy whenever you need to. All right. You decide when or if you want to make distributions. There's no required minimum distribution rules. Okay. So you can also access the policy value before or during your retirement. Okay. There are so many different benefits and added benefits to this, and so many different ways that you can utilize life insurance policies as a means of not having so much taxes that you're contributing to, because excess taxation is what is killing majority of the people today. All right, so that is why I just love the way that you have options to make this work. But again, saving money and managing money is a lifestyle behavior, and you have to understand that before you can actually start this process. All right, so life insurance, whole life, term life. I do want to briefly discuss, you have the IULs and the IWLs. The Index Universal Life policies are not always for everybody. However, it is something useful for certain people. And that's, again, the great benefit of life insurance. There's different types for different people, for different situations. With the Universal Life Insurance policies, it kind of fluctuates because that one does actually go by the stock market, okay? I wanted to see if I had a piece of information that I share with someone. I told you I got notes today, but it's just a lot of stuff. This is just great information that I love sharing with the community because, again, most people just fear what they don't understand. And you don't understand because you don't know. Some people are just literally unaware of what's out there. The things that we've been told about how stuff works is not always true, right? So we have to kind of know that. Now with the index policies, it's not a fixed rate. All right. So if that's not for someone, then they wouldn't want to go with that. They want to go with strictly just a permanent whole life policy. It does also take a bit longer to grow depending on how it's structured, but it does give a higher return, again, depending on how it's structured. Because a whole life policy can also do the same thing. A whole life, just a straight up whole life policy, can be structured towards giving you a higher return. When I use the term return, I'm referring to the cash value that is growing depending on how you choose to set up your policy, okay? It's going to continue to grow uninterrupted, all right? So here's the great word that goes with the life insurance: compounding interest, all right? Compound interest is what the magic is with cash value, all right? With compound interest, it's allowing your cash value to grow every single year uninterrupted. It goes back to what I was saying about you purchasing that vehicle to go employ that money to go make more money. The money in the cash value is able to continue to grow uninterrupted, and the uninterrupted just means that even when you borrow from it, it's going to grow as if you never borrowed from it. All right, I'm gonna take a sip of tea on that one. Did y'all hear that? It's going to continue to grow as if you never borrowed from it. All right. By the way of this by the way of the way this life insurance is structured, as you can see, it's strategic. And you really do have to understand how it works in totality in order for you to fully gain the benefits of the entire structure. But more importantly, you have to have discipline. You have to understand how paying yourself back matters. If you've been paying other people all of this time, all of your life, pay yourself back. If you're not good at keeping your own word to yourself, this is not good for you. Okay? If you cannot be honest with yourself and say, I am not good with borrowing money and returning money, this may not be for you. However, you can start small. Okay, you can start small and you can do things on a smaller scale to be able to build up that momentum. Because once you see how it works, you're going to want to do it on a larger scale because you're going to see what you're missing out on. And I would hope that someone wouldn't allow their lack of discipline to keep them from the benefits of what's really available to them. But if anything, I believe that it would encourage someone to change their mindset, to change their lifestyle, and get back into saving and managing money in a better and more strategic way and a smarter way that's going to benefit them, their self, their family, their legacy, and their community. All right. So that's life insurance in a very short breakdown in a little bit of time. All right. I didn't even get to the health side today, but that's okay because we have plenty more episodes to do. You're going to have plenty more information. But knowing that in order to be able to have the health and the wealth, they both go hand in hand. In the world that we live in, you have to be able to be healthy in order to work. And in order to work, you got to be healthy. That's just how it goes. They go hand in hand, right? In order to be able to buy the things that you need and purchase the things that you need and create the things that you need, whether you have your own garden, whatever it may be, whether you do herbs, you do teas, you do juices, whatever it may be, it's going to cost something. And even if that something is your time, you got to be able to have the time to do it. If you're too busy just going to work every day because that's all you know to do, then your time is not free to do the things that you love, right? So health and wealth really go hand in hand. You can't have one without the other, right? So money is not a bad thing. Without money, how are you doing anything? How are you building your community? How are you blessing someone else that is lacking on a bill or they're behind on a bill or something needs to be built for your community? They need to bring something healthy or something good or positive in your community. Everything comes with a cost. So everybody can't be lacking because then the whole community is going to lack. Someone has to decide, I'm going to do this for my community, right? So the money is not bad. The people that use it are using bad ones. Just like with credit cards. We've had this discussion last week or the week before. The credit card itself is not bad. The credit card can't do anything outside of what you tell it to do. It's the person managing it that does not have the discipline or just doesn't have the education, and that's why the credit card gets a bad rep. But the credit card is just a little piece of plastic card that's about this big and it can't do nothing outside of what you chose to do. Right? So it's all about our mindset, it's all about our understanding. And again, fear is what keeps people from not making moves because they just don't understand. They just don't know. And again, that's what the Paradigm Network is here for, to allow people like myself and other amazing people to tell you what they know, what they've learned, what they've experienced, so you don't have to go down the road and make the same mistakes, but you get to learn from our experience and you get to be educated and you get to make educated decisions, whether if it's in your wealth or whether if it's in has to do with your health. This is your girl, Demetria Janae. I thank you for participating in another episode of WWDJ, where we're talking wealth and wellness with me, Demetria Janae. Until next time, y'all enjoy y'all